I see a lot of similarities with 2001, 2002 when I got into the business. And that was the beginning of a 10-year bull market, that went until 2011.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics, and we are going to be digging into the silver side of things today. As been an interesting couple of months here. We've had quite a rally, and then we are recording on Monday morning, where, as by the time you're watching this, you'll have known quite a sell-off. I would suggest not the most unexpected thing in the world, especially given the rate and speed at which prices have been rising in silver and gold as well. But to dig into some of those dynamics, someone who is running a company that will be going into production in a couple of months later this year. So it'd be great to get his insight into what he's seeing and hearing on the silver market. And that is, of course, David Stein of Kuya Silver. David, it's a pleasure to have you back on here today and dig into all the things that we've seen in the past couple months. So most importantly, how are you doing today, my friend?
Well, thanks, Chris, for having me. I'm doing well. How are you?
Doing good. And I'll start with, as we mentioned right before we hit recording, interesting to see gold down $65 on a Monday, yet still trading at 23.50. So I'm curious how people are reacting out there. I mean, obviously, prices down, silver having a hard Monday as well, down $1.57, although still above $27. So if you went back to the beginning of the year, I think most people would have signed up for this. Of course, always can be a little bit unnerving when you see some of these declines. We also did see something like this about a week and a half ago on that Friday where silver touched close to $30. Then there was that big reversal in both gold and silver. But perhaps to begin, would love to hear your thoughts of anything that you've seen or been thinking about as we've seen the rally. You can talk about the sell-off as well, but certainly in the conversations you have at the conferences or with some of the investing funds as well. Just love to get any feedback or observations you've had on what we've seen so far.
Sure. Well, so to kind of take a step back, I mean, I obviously look at the silver price very, very closely, and the gold price along with it, because they are, they're tied together. I look even more at the equity prices, because I do run a silver mining company, and so I care a lot about how the equities are doing, not just the metal price. And sometimes, often, they are tied together and they move in the same direction, but sometimes they don't. So that can be interesting either way. Now, if you go back to February, the low on the big indexes for gold and silver, GDX, GDXJ, SIL, SILJ, was February 28th. So if you go back to February 28th, that's when the miners hit a low price, at least in the recent trading, the past few years. And then we've had this big rally since then. So basically the whole month of March, and then we got through about half of April before we're seeing this now pretty significant correction, at least in terms of the volatility. And so, this is definitely going to scare some investors out of their positions here in the precious metals, whether it be the metal itself or whether it be the miners. We're seeing that. We're seeing that with our stock. We're seeing that with the sector in general as well. Now, some of the other industry observations that we're seeing in the last few months. Big uptick, I think, interest in M&A activity, and M&A deals. It's very they take a long time, so it's hard to pinpoint them to the last month and a half of the rally, and that's causing them. So it's possible these were in the works before. But what I find and I've been in mining capital markets now for more than 20 years, is that when you do get into these rally periods, it sort of greases the wheels. So things that were in progress start happening faster because there's a lot more incentive on both sides to get a deal done, to get the announcement out, to show something to investors before they forget about you and go to something else, the next shiny new object that's out there. So we are seeing a big uptick in M&A activity in the last few weeks, and I think that's a really positive thing. That whole subject has been dead for a long time. And we saw there's a big gold merger today that's going to create a new almost $2 billion gold kind of mid-tier gold company. There's been some smaller deals as well, bigger companies picking off smaller companies in the last few weeks. So I think that's kind of interesting as well, and speaks to what should be a stronger, longer term rally here.
Yeah, and it seems like we're starting to see the beginnings of some of the investment funds coming back to silver, whereas I still often think back to that silver symposium we were at back in September of 2022, where actually ended up being the bottom of the cycle, silver going down below $18. And since then, there's been about a year and a half of, we see retail to some degree involved, yet wondering when the money is going to come back in. Several of the executives I've talked to have said they've started to see signs of that. I know you're mentioning that on the M&A side, but does that match what you've been seeing in the individual stocks as well, where funds are coming back in a little bit, maybe a little bit cautiously, but still starting to participate again?
Yeah, I definitely have been seeing that, especially the last month and a half. I think a good thing to look at is trading volume, and certainly ours has been a lot higher, and I'm sure a lot of our peers, the trading volume has been a lot higher, really most of this year now, that's you got to attribute some of that to new investors coming back in and funds that are maybe moving down cap as well. That's a really important factor as well, is that when investors do sort of make that first call into the mining sector, gold or silver mining sector, they'll typically buy the biggest ones because they're not really convinced themselves yet, and so they want something that they can sell really easily if they change their mind. And of course, the ones that are the most liquid would be things like Barrick and Newmont, Franco-Nevada. And then as they get more comfortable and they, are more convinced of the thesis, they'll start to move down cap and take more and more risk with their portfolios. And there's no question that if you can buy a good junior in a bull market, you're gonna outperform a senior by many fold, like hundreds of percent. That you're going to do way better. So it becomes definitely a bit of a crowding into the juniors eventually, especially silver, because there's so few silver companies out there that are that legitimately mine and have silver resources. So that is something that we can look forward to. I don't think we're there yet. It's very light, the investment right now, but definitely moving in a positive direction.
Yeah, and I would imagine that won't necessarily be something that happens overnight, although it reminds me of a few things you and I have talked about in the past couple of weeks offline, where on one hand, we now have Costco selling out silver, which I wonder if there's some impact there where you start to get something in a mainstream consciousness. Although the other thing you and I have discussed a bit that I was hoping you could just walk through again as we're recording here, where we talked about the difference. Obviously, silver has reached these levels a couple times in the past few years. And I will pull up the SIL index chart here, and we're still quite a ways away. There it was at $48 back in 2021. So on one hand, I think you could say that the silver stocks have lagged. On the other hand, to be fair, there are some differences in the economic conditions. And if you remember what we talked about, perhaps you could just give a recap of that for people who are watching at home and some of the things that you factor in, as I know you are also active in investing in the stocks, of course, in addition to running in Kuya, but perhaps you could walk through that and give people a few things to think about there.
Sure. Well, look, I think what you're alluding to is the risk-free rates, which have definitely gone up since 2020, 2021. We were at basically 0% interest rates, which is kind of the risk-free rate that goes into the calculation when you're valuing future cash flows. Um, and so that can be a big factor. It's not the only factor that you look at when you're investing in a mining company, but if you're trying to put a value on production that's 5 or 10 years away, then the lower the interest rate, the better, frankly. And of course, with interest rates, up, that hurts that calculation. And so that's probably a factor. The other thing though, is here just to keep in mind is that this particular index, it's kind of packed with some very large companies as well, and some very large companies that actually don't produce a lot of silver in terms of percentage of revenue. So it's almost more like a mid-tier gold index. But nevertheless, there's no like perfect way to index silver mining stocks. Unfortunately, it's probably this and the SILJ are probably the best tools we have. But that's just another thing to keep in mind. However, with metal prices higher, there's no reason why these prices can't go back up to where they were before and beyond. $50 on this particular index, in this particular ETF. In fact, I'm sure if or when we get into a longer term bull market, which is, I think, really the story that investors should focus on are we in the next 10-year bull market for precious metals? And you can make your own decision, but if you are, then anything you buy right now pretty much is going to be up a lot, in the next few years. And that's where I honestly think we are. I see a lot of similarities with 2001, 2002, when I got into the business. And, that was the beginning of a 10-year bull market, that went until 2011 to 2012, depending on what, sort of index you look at. But you had a good 10 years there, and it included the credit crisis sort of crashing and then recovering very quickly. But but within that blip, you had a good 10 years of a bull market where good quality companies in gold or silver, especially ones that actually survived the whole time without getting taken over, they went up hundreds and hundreds of percent. In fact, some of them thousands of percent return. If you go from kind of 01, 02 to the end of that rally. So there's just some extraordinary returns possible. Obviously, this is not investment advice, and you have to pick the right companies. But that's to me that was my job back then, and it's still my job now, even though I'm running a company now. But that to me that's an extraordinary, almost generational opportunity that that we may be in the very early days on.
Yeah, and I think well said, where especially with silver, I mean, gee, if there's ever been an asset class where there's benefit to being able to take a step away from the day-to-day movement in prices, I think that would be it. And especially, David, I'll mention that at the same time that we've seen this rally, again, we still have the higher interest rates. Here's a look at the pricing, where now we see one rate cut priced in for the rest of the year. We were looking at estimates of 5 to 6 rate cuts earlier when we began the year, although inflation has not come down quite to the targets had hoped for. And I would suggest maybe the US government not making that any easier. Here we see over the weekend voted to borrow another $100 billion to send to Ukraine, which a lot of things fueling inflation. And um, any thoughts in general on what you're expecting out of the Federal Reserve this year, where now, again, we have forecast pricing in just one rate cut at this point?
Well, it's interesting because I think when the 5 or 6 rate cuts were expected, the gold and silver prices were actually quite a bit lower than they are today. Which is counterintuitive. You would expect the opposite. So we have very strong, precious metals market with despite this higher for longer narrative. And it is sort of very difficult to see what the catalyst will be for the Fed to start cutting interest rates right now. I think the what may happen is eventually there'll be some maybe impetus to try and boost economic activity a little bit, starts to languish, and maybe drop by quarter basis points kind of thing. But I don't expect anything dramatic unless we have a black swan event. So I think really the interest rate story is almost not a story for this year. And we'll have to look at other macro factors, currencies, the election, geopolitical risk, other things like that. I think will probably have a bigger bearing on the gold price, and therefore, and thus the silver price, than interest rates will.
Yeah, and interesting. You mentioned the election in there, especially since last week or two, there's been a handful of stories. Judy Shelton, who was part of Trump's team, commenting on the possibility of a gold standard, and a few other articles suggesting that Trump's overall team at least considering that. So it would be quite a day if we woke up going back to a gold standard one day. Yet either case, sure, a lot will depend on the election coming up in just a couple months. One other thing I wanted to mention here before we took a quick look at Kuya, we did have the Silver Institute put out their World Silver Survey last week. And as we see here, a deficit in 2023 of 184 million ounces. Interesting, they're calculating or forecasting rather an even bigger deficit for 2024. And the one thing I wanted to ask you about is we see the mine production peaked back in 2016. Obviously, you and I, as well as other people who've been on the show, have talked about what kind of production comes online at higher prices. But just in a more general sense, in the next 5 to 10 years, what do you see happening with the mine supply? Do you think it's realistic that we're substantially higher? Is that feasible to get back to that $900 million mark? Or when you look at, let's say we had a silver price stay around here, at least for the next couple of years, what do you see with the mine supply in the next half or full decade or so?
So basically you need another 80 million ounces, roughly, of annual production. And that's got to be net of all the losses that typically happen just from mine depletion. So that's not going to happen in any one year or even close to that. They'll probably take another decade to get back up to that level, would be my suggestion. We're not really seeing the clues that would suggest we're even going ready to go on an uptrend in mine production. There is a lot of money, or there was more money being raised in the last month. I mean, that is one thing to look at for juniors. But by and large, the money is all going into exploration, which does not translate into new production for a very, very long time. So that's not really helping the mine supply at least go up. And the other thing is, I think the larger sort of the leaders of the silver mining industry, there are some of them that are doing well, but there's quite a few that are still, even at these prices, languishing in terms of their cash flow and their profitability. I'm not sensing that there's a lot of expansion going on there with those bigger companies. That can be a source of new production is if, let's say First Majestic takes one of their, and I'm not an expert on First Majestic, but say they take one of their silver mines and they say, well, we're making so much money over here, let's sink 100 million into this mine and, increase production. That stuff is not happening right now whatsoever. I don't see any signs right now, anecdotally or otherwise, that the mine supply is going to grow in the next few years. And of course, I guess Metals Focus agrees with me there. They're forecasting a small reduction. I think it was 830 to 823. But yeah, I think we've got a long way to go before mine supply sort of catches back up to where it was.
Yeah, I'd certainly agree with that. Although one area you said there's no signs of new production coming out. Maybe you didn't say that exactly, but I will point to one sign of some new production coming out that I know you're quite happy about, which is your Bethania mine down in Peru. And perhaps you could give people an update on where it stands in the timeline of going into production, perhaps also the full amount once production is ramped up, and a little bit on the cost structure as well, so people can be up to date on what you have going on there.
Sure. Yeah, we won't contribute a whole lot to the global supply this calendar year. Maybe a few 100,000 ounces, but we're in the sort of the latter stages of the underground development that we need to do to prepare the mine for production, and we are looking to sort of start production and a ramp up process later this quarter, and then continue that ramp up over about another 12 months. So we'd be looking at full production, or maybe full is the wrong word, but our initial target production from the Bethania mine, we hit that around mid-2025. And at that rate, we'll be producing, over 1 million ounces of silver equivalent. So maybe about 1 million ounces a year of pure silver. And, that's intended to be just sort of phase one. And we've all said all along that we think Bethania is going to get a lot bigger. But we want to get some production going first and start, we believe our costs are going to be very low, especially once we get up to that full production rate next year. And so we can make quite a bit of cash flow, even at 1 million ounces a year. And that, if we can put some of that back into exploration, or, look at using that to expand, or both, that kind of organic growth, I think is going to be very, very lucrative. And as a large shareholder myself of Kuya, that's really what we're looking for is, to maximize the growth of the company, minimize dilution, and we can do that by generating some of our own cash flow.
Okay, and what are you expecting as an all-in sustaining cost once that is ramped up?
Well, I don't think we've ever given sort of formal guidance based on our new plan, but I guess what I can say is that in our PEA, that's a couple of years old now, we had kind of a range of $10 to $12 an ounce, all in sustaining. Now that was if we build our own mill, and we're not doing that right now. We're doing a toll mill for the first year or so, and then build our mill later. So the toll milling will add a few dollars to maybe $3 an ounce to our costs, and on an all-in sustaining basis. But again, it's worth it for us because we save so much capital up front. That's very difficult to raise right now without just kind of diluting the shareholders to smithereens. So we're able to do that and at least get some production going, some cash flow going, and we'll be in a much stronger position to build that mill when we decide to do so in the next 2 years.
Okay, that makes sense. And at the same time you're doing that, you also did have an announcement about 2 months ago that you were involved in the Hadid silver project. Interesting, over in Saudi Arabia. And Curious if you could give us a quick update there, and also curious if that's helped to expose you guys to a new group of investors that is a little bit different than, as you phrased it in one of your mailings, just the typical gold and silver crowd that is going to the shows. So anything you could touch on that one?
Yeah, I mean, interesting. You point to that one. That's definitely an unusual deal for us. But the background there is that we were already in the region, and we have been for quite a while. We have some big shareholders in the Middle East, and so we've got a strong presence there. We've been attending the Future Minerals Forum, which is a fairly new conference that they hold in Riyadh, Saudi Arabia. I think this year, 2024, was the third year. They do it in January. And a couple of years ago, we were, and we've been a speaker there, and had a varying different presences over the years. And this year, 2023, the Saudi government released a portfolio of properties to be bid on, to kind of an auction process. But you're not actually paying them. What you're doing is your bid is how much you're going to spend on the project. Because they want money to be going in the ground there, to raise the mining industry up, to boost the mining industry, and also social, CSR, environmental. That all that goes into the bid, and so we partnered with a Saudi company. They were really leaning on us for the expertise, the mining expertise, and the exploration expertise. And so we were able to partner with them. They provided the funding for the bid, and together we were able to win it. So that was just announced in January, and again, as you alluded to, really I don't see us, as Kuya, at least going and starting a mine in Saudi Arabia. First of all, this is a very early stage project, and it would be many years before it would be in production, even if everything works out. But with that being said, it is a region that has, definitely an appetite for investment into the mining industry. They're looking at ways to do that, both domestically and foreign, and outside of Saudi Arabia. And I think by developing these partnerships, it gives Kuya an advantage, to tap into that universe when we need it in the future. And certainly for bigger opportunities, it is a great place to go and get partners, get financing, etc. And with that being said, the Saudi government is very, very serious about developing a mining industry. I would say about between 2/3 and 40% of Saudi Arabia is, kind of exposed rock at surface and favorable to mineral exploration. But despite that, very little has been done because of the focus on oil and gas in that country. And so they do see an opportunity to have a new kind of wave of mineral exploration going through the country that should lead to some new mines in the next 10 years. So it'll be great if we can be a part of that.
Yeah, especially like you said earlier, if we are at the beginning of a 10-year bull market, then certainly seems to be good to have an investment partner there, and seen a lot of plans for them to increase their mining access. And of course, the Saudis were one of the investment groups that does have some history with their involvement back in what we saw in the spike in 1980. So glad to see that you have some new partners out there and also taking Bethania forward. So seems like good times and good things are happening. And David, perhaps just wrapping up, you could let people know if they have any questions about what you're doing at Kuya or would like to get in touch. What's the best way to do so?
Well, I would say go to our website, and we've got a contact tab there, and we have a number of ways for people to contact us, but they can contact us there. It'll go to our info@kuyasilver.com email. Can book a meeting with us, and then we've also got all of our social media on there. You can follow us. on LinkedIn, X, Facebook, Instagram, etc. And we're happy to stay in contact with our fans, our many fans and shareholders on those platforms as well.
Well, appreciate that. And that's at kuyasilver.com. Link also in the description field below. And David, great as always to catch up with you, and really nice. I guess that's one of the things that happens when you're doing something for years or decades, but at least you and I talking about silver for years and thinking back, especially to that 2022 Silver Symposium, and nice to see when things turn around a bit and also projects get moved forward. So I say congratulations to you on everything you've been doing, and great to catch up with you as always. We'll have to do this again soon.
Thank you very much, Chris. It was my pleasure.